What's up, everyone? It is Derek Vandelander here, and this is the 25th video, the final video of this course. Now, remember, I am going to be giving you a lot more information after this is all out. I'm going to be giving live webinars. I'm going to be giving live training. I'm going to be giving trading ideas. I'm going to be having these challenges where I'm going to be funding traders. So we have so much going on that's going to be going on after this that's going to just benefit the whole community. And when I'm telling you guys that this community is going to grow like crazy after I can take my time and just focus on the actual people, it's going to, just grow like a weed. And we're going to have so many successful traders throughout Trader Society. But this is a very important video because it's one of the biggest issues. And I think the stereotype around trading psychology is very, I don't think it's right. I think that a lot of the problems solved around trading psychology becomes a factor only when you're doing something wrong or something that you're not supposed to be doing in the market. So I'm going to explain that more throughout this video. I'm freaking excited. I hope you guys have enjoyed this course. I've enjoyed doing it for you guys. I enjoy the feedback so much. It really, really freaking motivates me. So I'm excited about that, and I'm really thankful for you guys that have taken the time to actually communicate with me and tell me how much you're enjoying this or anything. Even if you're not enjoying it, let me know, because I want to try to come up with ways that anyone can learn from what I'm teaching, okay? So if you have any ideas, please do not hesitate to come to me. Anyways, again, I'm so grateful you guys are here. After this video, you should have a big grasp on trading psychology and how to use some tools to convey your trading psychology into a tool that actually helps you throughout your trading journey, okay? So let's get started here. What does trading psychology actually have to do with trading? So trading psychology refers to the emotions and mental state that help dictate success or failure in trading securities. So trading psychology represents various aspects of an individual character and behaviors that influence their trading actions. So a lot of times what I see in traders is their trading psychology kind of is based on their life, and how they run their life is kind of how their trading goes. If they're not very organized, they're not good traders. If they're organized and straightforward, they're usually they're not going to blow their accounts. They're usually a lot more put together. Now, the people that do really freaking well in trading are the people that see trading and make it their own and make the strategy their own. So you may not want to do everything the way that I do, but the thing is you have to come up with a tool to make the strategy fit you. And if you can't do that, then you'll have to come into a strategy that is you, okay? And I'm going to explain that right now. So personally, I believe that trading psychology, like I said, only affects you when you're doing the wrong thing in trading. And if you know that in your subconscious, you are doing the wrong thing. So how we solve that problem is by obviously not doing the wrong thing. If we follow our rules, follow our risk management, take the trades when we're supposed to be taking the trades, our psychology shouldn't be a major issue. But here's the thing. 99.9% of traders, especially when they start off, do not follow the rules. They think that they can flip these accounts without these moves going against them, which is just not the case. It's just not going to happen. There's always going to be that one trade that is going to go against you, okay? So it may be fun and it may be cool. Even on your first couple trades, you may win, do awesome, but that's where you get hooked right there. And you think that you become a god within this industry. And then, you win 3-4 trades, and then you're way over leveraged, and that one trade hits you, and you might have lost all your money. It's a bloody battle when you are doing something that you're not supposed to be doing in trading, and it deep down. Like I explained earlier in this course, when I first started trading, I didn't always follow rules. And when I didn't follow rules, this is when bad shit happened to me. Like when I lost the $40,000 in the beginning of my trading career. When that happened, it was such a stupid mistake because I knew that trade was going to go against me and just continue to go against me just by the chart pattern that it was on. I was looking at that, oh, I should close out. It's a $4,000 loss, but then I don't want to lose that $4,000. Oh, I should close out. It's $8,000. This thing is going to go against me and continue to go against me. Okay. Oh, now we're at $20,000. How are you going to close out of a $20,000 position and feel good about that? You're not. Okay. So this is where it gets you, and this is where it messes you up. And this is why risk management is so important, because if you're doing the appropriate things, you're not going to be sweating about losing 2% of your account, losing 3% of your account. It's not going to be that big of an issue, because on that next trade, you're just going to make it right up. So keep that in mind throughout your trading journey. Write that down, because that is something that is very important. Okay. So, like I said, the first thing that you need to do is you need to find a trading system that suits your personality. And that may be my trading system that I've taught you. For a lot of people that are visual learners, I noticed that they are pretty dang good at seeing what I am explaining throughout the trades. They're pretty dang good at looking at a shark fin and being like, holy cow, I understand why this would reverse now. Looking at hidden divergence, understanding why that would reverse. People that are really good at pattern recognition are going to be really good at this strategy as far as seeing moves, okay? So anyways, there are 4 main styles of trading, and you can use any of these throughout my strategy, which is really awesome because my strategy works on any time frame. Now, the higher the time frames, the less amount of trades you're going to get. That's just obvious, right? But of course, the moves are going to be much larger, which means you're going to A, get more drawdown in trades, and B, you're going to have a lot bigger take profit zones, okay? So what we have in these 4 styles are, we have scalping, which is, I'd say the 1 to 15 minute time frame. We have day trading, which is going to be anything over that. I'd say like the 1 or the 30 minute to 4 hour. And then we have swing trading, which is going to be the daily time frame, and position trading, which could be higher than the daily time frame. And that's just something that you're going to be in a trade for a really long time. Okay. So scalping is best suited for active traders that can make immediate decisions and act on these decisions without hesitation. So impatient people often make the best scalpers because they expect their trades to become profitable, and immediately they exit the trade promptly if it goes against them. So being a successful scalper requires focus and concentration. So it's not suitable for someone who doesn't have a lot of time to look at charts. That's just the point of it. And it's not suitable for somebody, I can't even say this, it says right here, a daydreamer. Yes, you got to be understanding of the chart. And the thing is, with a lot of people, if you're trading, and here's the thing, if you're trading and you're really invested in it, that means this is something that you should continue to do. Now, if you're trading and you're not 100% invested and you're kind of like, if it goes well, then that's great. If it doesn't, then I'll go on the next thing. Then you might as well just, hang up your boots and call it a day, because this is something that you really have to focus, especially in the beginning of your career, for a long time. So what I started doing when I first started trading, I was, when I first started, I was still working a little bit, or I was still working, but I knew that I was going to get laid off. And that's just because the project we had, was only a month-long project, and we didn't have any more work after that. So I was working like 16-hour days, but I was so invested in the charts that on my breaks, everything, I was constantly looking at the charts, okay? And I knew this was my way out. I knew that. And the sad thing is my first trade that I did, I won I think $500. And at that time, $500 was so much money to me, because I was only making $800-900 a week, busting my ass, building scaffold and doing crazy shit like that. But when I got a taste of how easy that money could come, I was attached, and then I understood the market pretty quick. I understood why the market would do certain things. Now, I wasn't near as good as I am now, and I should have definitely learned more back then, but we didn't have the resources that we have now, okay? So That is what scalping is. We have day trading, and day trading is a style more suitable for traders that prefer starting and completing a task in the same day. For example, if you were painting the kitchen and you would not go to bed until the kitchen was finished, even if it meant staying until 3 a.m., that probably means day trading could be for you, okay? So, and the reason is because oftentimes when you're day trading, you're getting in positions early and you're not getting out of these positions for sometimes, even up to days in these types of trades. So that's just the fact of it. And I am comfortable honestly doing anything. If I see the right pattern on any time frame, I'm going to take that trade. And it's, the three patterns that I have taught you. But now we have swing trading, and swing trading is compatible with people who have patience to wait for a trade. But once they have entered a trade, they want it to become profitable quite quickly. So swing traders almost always hold their trades overnight. So it's not suitable for people who get nervous about holding a trade while they're away from their computer. And that's the thing. You shouldn't be nervous about a trade no matter what, unless you are risking money that you can't afford to lose. And that's just the fact of it. Or you're risking too much. So you shouldn't be scared of being in a trade that you're risking 2% of your account on. You really shouldn't. And if you are, then I just do not think that it's the right time for you, or you just have to learn how to change your mindset when it comes to losing money in this market, because you're going to lose money and you're going to need to accept that you're going to lose money in this. And it's hard. It's hard. It's a freaking hard thing to close out or have your stop loss taken hit. And you realize, oh shit, I just lost $1,000, It's a hard thing to do. No one likes losing money, but once you learn to get emotionally unattached to money when it comes to trading, then your life's going to be 10,000 times easier. So when I'm trading, my account, I have absolutely no emotional attachment to my trading account at all. And, this wasn't an easy task to accomplish. It took years and years to not be worried about my trades. And when I really stopped worrying is when I started using proper risk management, okay? So that's why I preach risk management so much, because it's helped me so much and it's helped me stay so much more consistent in my trading. Okay, and then we have position trading. Position trading is the longest term trading, and often, trades happen for, several years. I doubt anyone here is going to be a position trader, but if you are, I'm not even going to explain it. If you are, totally awesome. Just pause this video, read about it, and, see if this is something you may be interested in. Like I said, I don't think anyone here is going to be a position trader. You never know, but I'm not going to even explain it. So what's the newest, biggest mistake traders make? So choosing a trading style requires flexibility to know when a trading style is not working for you, but also requires this consistency to stick with the right trading style, even if it's not performing optimally. Okay, so one of the biggest mistakes that new traders make is they love changing their trading style. And it's so crazy to me because I've literally used the same trading style since I've started trading. I've just added to it because I saw that it worked. And I knew that eventually I'll get to the point where it's going to be how I have it now. I knew that there was going to be more ways to connect the dots to for reasons why I should be into a trade, okay? And I've made that happen with what I have now. It's just a beautiful thing. And it will continually be a beautiful thing. I have a lot of people worried that the strategy is going to get known and the market's going to change, and that's just simply not going to happen. I don't have enough control. This people that are watching my videos aren't going to have enough control of the market. They're not going to have enough equity to even move the market, probably a couple pips, and that's just the fact of it. You'd have to have, millions and millions and millions and millions of dollars to even move the market. So I'm not concerned about it at all. And if, some crazy thing happened where every trader was, trying to trade this strategy, whatever, this is gone, but it's not going to happen, and you don't have to worry about that. I think that's a huge myth in the trading world. And here's the thing, the market changes, and that's just the fact of it. But the thing is the way that the indicators work is they don't change. They're constantly doing the same thing. So we may get different swings and we may get different, a little bit different patterns or whatnot in the market. But the way that the indicators are lined up throughout this strategy, it's not going to ever be void because the indicators are the ones telling us that we may have potential trades, okay? That along with, of course, like the 50 moving average and all these moving averages, there's always going to be the same types of moves off of these averages and the trading patterns that I have taught you, okay? But anyways, constantly trading or changing your trading style is a sure way to catch every losing streak. Once you're comfortable with a particular trading style, remain faithful to it. That's the biggest thing. Even if you're losing and you're in a losing streak, you got to remain faithful to it. Don't switch up on trading strategies unless you just don't feel comfortable in your trading strategy that you're in. But we have so many stinking people out there that buy course after course after course, which is insane because the people that are obviously either you're not getting the course from the right person or the people that are teaching you have obviously done what they taught you through their course, so it obviously works, and that would mean that you were the issue, okay? So try to remain faithful to one strategy. I hate it when I see people teaching multiple strategies. It drives me insane because it's just not what professional traders do. Professional traders have, typically, at least the ones that I've researched, have one way that they trade, and that's just what they do. So there's no point in trying to master your trading psychology until you find that system that you're comfortable trading with. So another thing, create an environment that allows you to trade your system as perfectly as possible. This is a huge thing to me. I take my trading environment very seriously. If you guys have followed me on Instagram or anything, you know that I always try to keep like a very uplifting office in an area where I feel very comfortable and zen in, because it does make a huge difference. If my area is cluttered and everything's everywhere, that means my brain's cluttered. Everything's cluttered. So your area that you're in should be organized. You should enjoy the area that you're in, and it's going to make it a little bit more easy to enjoy your trading journey. Okay, and then overcoming faulty trading behaviors. So keeping a record of about everything you can while taking a trade. The better the information you have, the better the targeting, the changes you can make. So being aware of your thoughts while trading. And that's exactly why, if you go to my website, I created a checklist. And you can download it. It's on www.tradingsociety.com under downloads. It's my checklist, and I have to have at least 3 of the confluences on that checklist checked off before I will take a trade. Now, if I take a losing trade, I document that trade, and there'll always be a reason to why that trade didn't work out. And it'll be something that I maybe overlooked in the market and didn't take into consideration, okay? So if you are a new trader, a veteran trader who is not profitable, I recommend going to a demo account or a micro account and not adding money until you're provenly profitable. And here's the thing. You have a lot of people saying, oh, I can't trade. I can't take a demo account seriously. And this is one of the biggest things. I traded a demo account for a long time and took it so damn seriously. I acted like it was real money. And if you can't do this, and this is just what I believe, if you can't have that attachment to that fake demo money and treat that like you would treat your own trading account, I think that's just a bunch of malarkey. I think that's such bullshit. You should be able to treat your demo account like a trading account. And if you don't, that automatically gives me the knowledge that you're not going to be a profitable trader because you can't even take a demo account seriously. You can't take that action of doing the demo account and treating it like your baby and making your trading consistent and making yourself it's almost like a class that you're taking. And when you're using that demo account, you are actually creating good habits within yourself by being structured within your trading. So that's why I've always told people, use a demo account. There's so many people that are like, oh, I can only use real money. And that just, I'm telling you, that drives me insane, because what's the point of using $100 account to practice on penny lots? Why don't you get the amount that you're going to deposit when you're ready, and get your mind comfortable with the lot sizes and everything that you're going to be using, so you're comfortable with that. If you put $100 in, you're going to lose that $100. It's just the fact of it. You're not going to be emotionally attached to that $100, because in reality, $100 isn't a crazy amount of money. And most people that are going to put $100 in, they're going to understand that they're probably going to, their intentions are to flip that $100, but a lot of the times, they're not going to do it. So if you're hearing this and you're feeling resistance because you want to make money fast, then you're already not thinking like a pro trader, and that's just the way it is. Leave those thoughts in the dust. The pro trader is a very self-aware person, and they acknowledge what it takes to actually become a professional trader. They don't live in fairy tale land like a lot of these people do. It's not going to be these things where you can put in $1,000 and you're just going to flip it like to $100,000. Now, there are people that, yes, have done it. But more often than not, I firmly believe that if you're not following risk management, if you're not doing the right things, then eventually that, you might be over risking on that $1,000 account, but you're probably going to continue to over risk and over leverage on those trades. And when you do that, it's just having you create a terrible habit for yourself. So just be aware of that, be self-aware, and just be honest with yourself. Acknowledge your wrongdoings in your own trading and your own inner behaviors that are stopping you from becoming a profitable trader. And once you look within yourself and realize that the things that are holding you back are just small, minute changes that you need to make, then you're going to be so much better. And this takes place on everything in life. Be self-aware and take self-responsibility for the things that you're struggling in or lacking in or might not be doing right, okay? And then once you acknowledge these things and understand, like, you're not perfect. I have so many things that I'm still trying to grow at. And that's just, part of life. And when you're growing and constantly trying to work on yourself and constantly acknowledging your own bad behaviors, it starts to create this pattern of you only wanting to really do the right things. And that's just something that I love about, building yourself. And I'm going to take that very serious on my channel. I think personal development is the number one thing that's going to change your life. And the thing is people don't even know where to start, or they're not even taking the time to do what they need to do to change their life. What they're doing is they're looking at these false idols online, these people that have these massive followings and, the crazy cool stuff and all that stuff, but you don't know what it took to get to that point. And the way that they're operating is not going to be the same way that you're going to be able to operate, because those people are set in other areas of their life as well. So if they lose that, like I said, if they lose a trading account, then they're not concerned about it. And that's why they can do these things like flip $10,000 accounts to $100,000 accounts, because they have that money flow coming in. They have, 10, 20, 30, 50,000, $100,000 a month that they're making. So that's just the truth of it. And a lot of these people aren't going to be on that level. That's just life. The 80-20 rule. So this is very important. So this is called the Pareto Principle, also known as the 80-20 rule. The law of the vital few, or the principle of factor sparsity. So this states for many events, roughly 80% of the effect comes from 20% of the causes. So what this means that the 20% of the things that you are not doing right is the percent that is holding you back. So you might be doing 80% of the things right, but that 20% is what is holding you back. So what you need to do is find out the 20% that you're doing wrong and slowly cut away at that percentage until you get into the 90% of doing the things right. But take that, and like I said, come self-aware. own your responsibilities for your mistakes. I mean, we're all humans. We've all had shitty things happen in our life, and you don't know what these other people have gone through. So we all have these different patterns, okay? So figure out what's going wrong in that 20% that you're doing wrong and slowly break at that 20%, and you'll notice, and use this for everything, because more than likely on the things that you're, either half-assing or not going all the way in, it's because you're, doing the 80-20% thing, where that 20% is what is holding you back. And that's the crazy thing. It's that small amount of, it's 1/5 of the actual thing. But that 1/5 is what is holding you back from becoming an actual profitable trader, or even doing certain things in life. That 20% is huge. Try to get it up into the 90 percentiles, and you're going to start seeing your whole life change, and you're going to start to see growth in a ton of areas of your life. Okay, so the Pareto developed both concepts in context of the distribution of income and wealth among the population. I recommend you read this book if you have not. There are likely few things in your trading that causes most of your trading problems. And all you need to figure out, like I've just said, you just got to figure out what issues you are creating for yourself and how you can fix those issues. So write the issues down, see how you can fix those issues, and you're going to slowly fix them, and you're slowly going to start doing better and better at everything you do. Okay, so negative trading behaviors: not being committed to your trading system, searching for the holy grail, buying trading course after trading course, being influenced by other traders. This is huge. Do not be influenced by other traders, because people see things differently and they're also trading different ways, okay? So if you're going to be influenced by anyone, be influenced by somebody who has a really proven track record. And that's just because, we don't know in this industry. There's so many people that are just, making money off of signups, and that's just, if you're not seeing the documentation of what they are preaching, then you should just have common sense into the fact that you are being fooled in a way. You want that documentation, you want the proof of their success. And when you get that, then that's going to make you ultimately know that, hey, you're following the right person. You might have that, looking for the magic trading system, the grass is always greener, fear of missing out. Stop wasting time and find out the method that suits you. And then, there's so many things that you can do to actually commit to these types of things in your life, and you just got to be the one that does it. No one else can do it for you. It's got to be all you, and that's just the fact of it. So not being committed to your trading system. Some of the best traders I know stick to the one thing that works for them, whether it's a certain patterns, or no matter what, they have a system that they absolutely stick to. So every trader that I know is losing money all have similar traits. They never seem to be able to stick to the rules. They don't have an exit strategy. They're always switching strategies instead of staying committed to one specific strategy. They do not have their psychology intact. They want to just make money in the market, and they want to make it fast. So if you're entering trades too early, here's what you need to do. Your thought process is always feeling like you're going to miss the trade. So you tell yourself that you have to get in. Then the actual move you were waiting for hits you, and you fail to get in due to the fact that you're already in the stupid trade that you should have just waited to the point that you needed to be in the trade. So now you're dazed and confused about your first entry. You begin to doubt yourself as a trader. Some of those thoughts you have are that you are a failure and you will never ever succeed in trading. And if you're telling yourself this, you need to change your mindset right now and understand that the way that you talk to yourself is going to really affect your whole life. If you're talking negative on yourself, you just have to realize that we're energy. And when you're talking negative energy to yourself, what you're doing is you're lowering your own frequency. We're built on frequencies. And when you're talking good and you're giving yourself a good pep talk, you're ultimately just highering your frequency. And this is why, if you're one of those people that are constantly negative, constantly gossiping, you have to realize that your frequency is low when you're doing this. You're doing things that are creating your frequency to be low. And I'm going to go way more in depth on this. This is going to be something that I go full in depth on because I think everyone needs to know this. This is something that Tony Robbins, one of my favorite guys that I follow, he uses, but not a whole lot of people knows what he uses. And I've actually learned this like crazy in the last few months, and it's my mindset's completely shifted to a whole new way. It's been this way, but I'm just constantly growing. And now it's at a point where I know what to do. I know what to do to make the things that I want to happen in life. And it's very simple. And I'm going to be giving you all these tips, okay? And it's going to be a completely new course on your mindset. And this is why I know that I'm going to build just some badass traders, because if they take that course as well, it's going to change their whole mindset. It's going to change their whole life and ultimately bring higher vibrations to the people around them and to themselves. And that's just so important because the way that the vibrations that you are around is how your life's going to be. Okay. And here's the crazy thing is that the average person is born with it's the range is anywhere from 100 to 1,000, which would be a crazy a number. And the number that the average American is being born with nowadays is around 204, which is insanely low. They're basically zombies. Their vibration is so low that they're not aware of their own consciousness, and that's crazy. Once you start getting around, the 350 to 600, you're self-conscious. Your consciousness, you are aware of it. You're aware of your own inner self, and that's so important. Some people don't realize that they're stuck in this paradigm of just being basically, you've been programmed to be a certain way, and this is just how it's happened. There's so much proof behind it, but it's pretty crazy stuff. We're going to go way more in detail, and I'm very excited about that. But let's continue with this. Traders often continue just to do the same thing over and over again instead of actually dealing with the real problem. And this is just this goes for everything in life. You're struggling at one area in life, it's because you're not tackling the real problem. And once you tackle that real problem, then that is when that problem's going to disappear. Instead of just putting that problem in the back, you need to put that problem in the front and just attack it. And you're going to realize that everything you do, when you do that, life's going to get so much more easy instead of, just hiding it in there. Because what that is doing is that's just creating internal stress. When you know you're doing something and you're doing it wrong and you know that there's a problem, but you're just putting it in the back right there, that's going to constantly be in your subconscious, and you're going to constantly think about it, and you're constantly going to be stressed. You're going to feel yourself being tired, and it's just self-sabotaging. I have so much things that I can talk about, but let's continue with this. So deal with physical behaviors. If you normally rush to the charts when you spot a potential trade setup, then switch your behavior, calm down, take a step back from the charts. This isn't something that you should emotionally be right into and just have this super excited, like, I need to be in this trade. That's not how you should be. You should be very detailed within, and you should already know where you want the trade to go before you're taking the trade setup. So you're going to feel very uncomfortable throughout this journey in some points. You're going to find yourself being weak and not following the rules, but you can ultimately stop that by just following the rules, following the plan, following the guidelines. And if you do that, you're going to be one of the few. I'm not going to say few, but one of the 5% of traders that make it. That's just the fact of it. You're going to be one of those people if you follow these guidelines, okay? So create a checklist of everything you need to see before entering the trade. Take that time to actually read and mark off the checklist. If you are doing this, or if you're trading and you're one of those people that are very emotional traders and just get into a trade because they think it's going to do something, you need a tool like this, or you need to switch your brain wave pattern to fix that issue you're having, because ultimately if you're going to be one of those traders that just gets into trades, you're going to fail eventually. I mean, eventually that trade's going to not do what it's supposed to do or what you think it's going to do, and you're not going to even know where to exit. You're not going to know what to do. And then check the screen inside of the watching screen. So checking means taking a quick look. If your requirements are not met, take a step away from the market. That's just a simple thing. I know if your requirements aren't met, but the trade looks good, oftentimes you're like, I need to be in this trade. But if you can get yourself to the point where you're only taking setups based on what you need, you're going to be so much better off compared to not following your own rules. Okay, so just build these habits that are protecting yourself from that self-sabotage. A good study to help with the emotional aspect would be this therapy called emotional focus therapy. You can Google that on YouTube, or you can search that on YouTube, and just look at different ways that you can help yourself grow. And again, emotional focus therapy, it's going to help you out a little bit, okay? Again, so if you're entering trades too late, this comes from too much analysis and having tremendous fear about being on the wrong side of the trade. So the trading conditions are all met, yet the trader is still looking for confirmations. Like, you know what the market's going to do, or you know, your pattern is there. You know what you're supposed to be doing, but you're afraid to take it because you're just not confident in either the strategy or yourself. Not accepting the unknown nature about the market is being combined with fear, usually due to the previous losses in the market, or to just the fact that you don't know what you're fully doing yet. So what you should do is measure the longest recorded series of losses with the system you're doing. This is just an example that you can do. And the crazy thing is you're not going to find a crazy amount of these types of trades in this strategy. I mean, you're definitely going to find losers, but you're going to understand that when we have everything and the confluences put together, you're going to see these trades work out so much, and it's so beautiful. And I think by you going and back testing that, it's going to help you understand that this strategy works very well, and it's going to make you to want to be in these trades. So if I lose, okay, so mentally accept that there is always going to be a chance of a series of losses. That's just life. But just continually do what you know you're supposed to be doing, and ultimately you're going to do very well. Now, if I lose a trade, I always step away from the market. I know something is off with my trading, and I accept the fact that losses are inevitable. Usually what I'll do, and the funny thing is, after I take a loss, I'll usually go to the mall and buy myself something, and it kind of just gets my mind off of it. And this is, you know, no one likes taking a loss, and it can mess with your head. Just the fact that, you know, there are times where a trade may look perfect and it doesn't work out. And those are the times that it's going to mess with your head a little bit. And that's where you just need to take a step back and understand that it's just, you know, something didn't work. And, you know, there could be very simple reasons to why it didn't work out that you just overlooked. And then you look at it and realize what you did. And now you understand why that loss happened. And this is going to help you in the future of your trading. So, like I said, don't talk negative upon yourself. That's just lowering your frequency. You just want to be positive with yourself. Constantly give yourself good energy, and you're going to notice a lot of good things. Now, when you lose control in the market, this is what happens. You're trading outside of your strategy. You're forcing trades. You're taking yourself into a trade that does not exist. Trading without a stop loss, moving your stop loss, risking too much with a single trade. Revenge trading, which means, you know, you took a loss and you ultimately feel like you need to be back into a trade to recover that loss. That is revenge trading, and usually when that happens, that revenge trade is not the right trade that you need to be in. So, and then closing your trades too early. There's often times where, you know, you may close your trade too early because you're scared that you're in this trade, but if you're using the proper risk to reward ratio, this shouldn't be a huge issue. Now, I want to show you, or I want to explain an example that, you know, you may enter or exit a trade early. Let's say that we are on a divergence trade and we have like a trend line that we didn't see previously hit, and the trade worked out, it's in our favor, but now it's on that trend line and we don't know if it's going to break that trend line. This is an example of an area where I may close my trade on that trend line. And actually, if you saw that video last night, we had a major trend line right on the 4-hour on Euro USD. And when it came up to that trend line, I took profit and it actually reversed off that trend line just because the patterns that I've seen it over and over again. So I understand that that's just all part of trading. And I didn't end up getting, my 90 pip take profit. I only got 41 pips. So that's just what it is. And, I'm actually happy that I made that decision, even though ultimately in the future, the near future, this trade, especially with it being NFP week, we may see this thing reject right off that 50 moving average on the weekly. And that's my guess. That's what we're probably going to see throughout this trade. But it still can go to that 200 moving average. But anyways, I hope you guys learned, and ladies and gentlemen, I hope you guys learned a lot throughout this video. I hope I maybe changed your mindset even in the simplest way, or maybe created a new possible mindset that you may adapt into. And I think that with what I'm going to be teaching you later on with this journey, it's going to help a lot of people, and I'm very excited about that. So if you like this video, please comment below. Please subscribe to my channel, and please talk to me. Hit me up. I like to see how you guys are doing. If you're doing well with this, I definitely want to be involved and see how it's going. So I'm very excited about that. I'm very excited about this journey. And again, I want to thank every one of you who has been communicating with me and commenting on my stuff. I'm so grateful for you guys. It's just been fun. It's been really fun to me. It was a long journey to get all this done. I've been working on this for a long time. And, there's been, I think the last 3 or 4 months, I've been getting about, anywhere from 3 to 5 hours of sleep. I'm tired. I can tell I'm tired. I look on the camera, I see that I'm tired. So I'm probably going to be taking, a couple-day break, just focusing fully on my trading before I start releasing the new stuff that I'm very excited to release. So I want to thank you guys again. I'm super stoked. We're going to be seeing you in these next videos. I don't know what I'm going to be releasing yet. I have a bunch of stuff. I have live trading videos that I'm going to be releasing. I have a bunch of stuff, and I don't know what I'm going to be releasing next. But I do know that I will see you again, and I'm super stoked, and I'm super grateful. We'll see you guys.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.